All right, this meeting is being live streamed. We are live on YouTube. This is the Chit Chat Money Investing Power Hour, number 27. For the few people that are joining us in the live stream but listening on the podcast, we've been doing this every week, basically for most of 2022, I guess starting in the spring. And the only rule of this show is that we have no preparation. However, actually, we have this amendment now because we're going to doing a 7 investing segment every show to help promote our sponsor in a fun way that can have some lively discussions on here. And that leads us into our sponsor today, and that is 7 Investing, a research service with different stock picks. And if you want to use our code MONEY, MONEY, you can get $100 off your annual subscription. That is a 25% discount on the annual subscription for life. And what do you get with a subscription, Ryan? You get 7 picks every month. This month, I got to ask, what were some of the favorite topics, or not topics, stocks that they recommended from all the advisors? They got some research reports on different ones without spoiling, obviously, what the picks are, because that's what you're paying for. What ones interested you?
I liked Matt's, but I feel like we say that every time. I think Matt.
His style, we're in the same sort of style group, yeah.
Yeah, there were 3 actually that I really liked.
Let me guess that healthcare one. The healthcare one. I know you like the healthcare one.
Yeah, we can't tease it too much, but yeah,
Well,
Dana's was really good. Well, I shouldn't say really good. Time will tell if it's really good, but
it's interesting. Good write-up.
Definitely interests me. It's something I have kept up on. It's not like it's in the healthcare industry, but not incomprehensible. Like I feel like I can get a grasp on the business. And then I also like Christoph's.
Okay, let me see. What one did he have without spilling? Oh, yes, that is interesting. Little software one, payments. Probably can't say anything more about that, but that is the tease. We won't talk about it for too much longer, but use code MONEY. They are exclusive sponsor for the rest of 22. We love them over at 7 Investing. Use code MONEY, get $100 off your annual subscription for life. All right, Ryan, what are we talking about this week?
I got some stuff.
There's plenty of news, yeah, that I remember. We're going to talk Poshmark later, getting acquired. That's going to be a fun topic. But
True.
We got the Jewel bankruptcy. I mean, we got the big elephant in the room, which is the Twitter deal closing. Should we start with that? We don't want to talk about it forever, but maybe hit on it for a couple minutes.
No, I want to start somewhere else. So
okay, all right.
You and I, and all the investors in Arch Capital are shareholders of Match Group. There was a new dating app launched this week called The Right Stuff. Not a Match Group product, but it's meant for conservative dating.
I think they right wing, maybe. I think they were doing too. Yeah, something like that. Not conservative, conservative in the political sense.
Yes, that's who it's like meant to be catered towards. Couple of things. I'm not like, I could care less about the political side of it, but I wanted to see what the product was like, so I downloaded it and I tried to sign up. No, I swear to God, okay,
it's due diligence, right?
It is, this is like my I have to assess the competition from Match Group. That's one way to do it, and there are so many flaws that they got wrong.
All right, name them.
Number 1, you've gone after a demographic. First of all, females on the platform first. That's the number 1 priority.
It's the hardest thing.
Should be for most dating app. It's the hardest thing to do, and the females will attract the male users. Bumble did it really well.
You don't have to. You don't have to even market to the male users. They will come. You build it, they will come.
Exactly, 100%. And they are not doing that. Whether I'm sure there are plenty of conservative women out there, but just about all the users apparently happen to be male. And that's one of the big problems in all the reviews that I'm reading. They say, all right, I'm on here, but there's no women in my area. I went to check just to see if like there's any users in general, and there's tons of men.
Yeah.
And so
I know
you've got a problem there. So that's problem A. Second of all, it's invite only.
That's, you can't have that either. Unless you're that, well, what's it, Raya or whatever. Unless you're that one, which is like celebrities only or famous people only. You can't have that unless it's for people that are quote unquote, whatever, famous.
right? And there's basically a couple of ways you can get an invite. It says, give us access to your contacts and we will see if any of them are already users. The last thing I want my contacts to know is
Oh
I'm
yeah,
joining
yeah.
some conservative dating site. This is,
It's relationship George.
I don't want someone to know that I'm on Tinder or Hinge or Bumble. I'd rather keep that fairly discreet. It's not something people are like outward about generally. The last thing now, if I'm like doing it even in a more niche product, you think I want all my contacts to see that I'm looking for an invite to this thing?
Yeah,
Absolutely not. And I mean,
it's
I don't want to be clamoring for an invite to some conservative dating site, no matter what. Even if your friend group is all
you
conservatives, it's like just this act of desperation. So there's
so you're saying
just
you would short this if you could, if it's possible. It's
maybe
as,
there's a way that they can like just like brute force their way to scale, but they've messed up on several accounts already.
the context thing is so crucial. You don't want any. It's again. It's literally, we wrote a write up on them earlier this year, and the title was Relationship George, which is from that Seinfeld one where it's like you have the relationship side of your life and you have the whatever social side of your life. That is still the same thing in online. You need separation between your online relationship or romantic life, however you want to describe it, and your social one. It should be complete. There should be no or absolutely minimal crossover. Try to minimize that. We got a comment here from Matt. Says, talk about how stupid Elon Musk is. I think we might for a second, but that has been covered constantly throughout the news. So we don't want to talk about the same thing that every other show is talking about. However, congrats, I think, are in order for the Twitter arbitrage investors. They were really nailed it. Probably annualized returns of about 100% within a couple of months. I mean, really, really strong. Um,
Yeah, the
glad to see some good investors do that.
I'll just hit on it right now because I saw like a fairly hilarious meme. It was basically Elon's face on Trump's Art of the Deal book. So
Mm,
they like replaced Trump's face with Elon's face, and it says Musk, the art of the deal. And then quotes, it's got make an offer out of spite, back out of the deal, get sued, publicly denigrate the thing you offered to buy, get your ass handed to you in court, agree to the original deal, act like this was your plan all along.
yeah, I worry though. It's not done. It's not a done deal. He's slippery. He is extremely slippery, and I could see him still somehow wiggling his way out of this. But
Did
for the
you
time
see
being,
the that he avoided going to court out of concern of getting COVID?
yes, Mr. Open the Factories in May 2020.
Yeah.
Yeah, well, he's a
Surprised that is
even
allowed.
worked
Yeah.
anymore. I think it's kind of like one of those rules where if someone like the health stuff is pretty black and white, if you get what I mean, where someone makes a case, they have to um I don't know. Like
I mean, I
you
use
can't
that
just
excuse. It's funny. We've all used that excuse when there's something we don't want to go to over the last 2 years. Almost the same.
I just tell people I don't want to go.
Well,
Maybe I have less uh
it's
I
called
don't know.
saving face.
Yeah, I'm not a big saving face guy, maybe to my detriment. All right, we got a question here. What are your favorite podcasts to listen to? Well, let's keep it investing. For one, ourselves, obviously. If you're watching this right now and you don't
You actually
listen to
listen to us
ours,
that often?
no, I don't listen to us. But I'm just saying,
Well, he's
we take.
asking what are our favorite.
Let me scroll through. Let me scroll through the. Let's see what I got downloaded here. I mean, what do you listen to? I've been listening to some of those founders ones now that they're free after the Invest Like the Best team acquired them. I like Invest Like the Best, like everyone else. I like Odd Lots from Bloomberg. They hit some interesting topics from time to time. Sometimes it's more market structure stuff that I'm not too interested in, but they have some cool stuff on commodities and like the real estate market, stuff like that. Motley Fool Money is always solid if there's a topic you want to get kind of a 10 minutes on. I mean, Business Brew is good for some long form interviews on with investors that might be a bit, different than typical interviews. And then I like Value After Hours too, which is basically a show that we are not copying, but we saw that we liked that show a lot, and we are doing a similar thing with this. So I like that one a lot. If you like the Power Hour format, I would highly recommend listening to that one as well. I think they do it on Tuesdays. So another day of
All
the week
right.
that you can do something like this.
Here's a couple for me. I like the Yet Another Value podcast.
That's good too.
It's kind of a similar format to what we have with the deep dives. I like the Business Brew. I'm not like a completely regular listener, but depending on the guest, I'll listen. They're just
Yeah.
longer, so you kind of have to have more time for those. And
Yeah.
then
It's definitely like the Rogan style, but the niche for investors.
I listen to the Wall Street Journal podcast a lot, just to kind of
Oh,
get
the
updates. Someone,
the one with the orange thing on it, the orange logo.
yeah,
Yeah,
the
that
one
one.
that's done by Gimlet Media.
That's a good one. Yeah, that is a good one.
The other thing, someone put together a list of buy-side gems, basically a list of different shows. So it's like a playlist of podcasts. No, we don't listen to the All In podcast. Sorry, I do not listen to Skim Off.
Yeah, we don't.
Scam
We
Off.
no. Yeah, I can't. I'm not. I don't like to be a supporter of Skimoth and David Sachs and all those guys. Can't say I want to support them.
I actually don't have like the biggest problem with Jason Kalaknis, but
Yeah,
I can't
he's
stand the
what
rest of those guys.
I agree. Kalaknis gets way too much.
It's gonna be this is gonna be we can't turn this into a podcast we don't like show. So I'm gonna but no, I don't listen to that very often. The other one is Capital Allocators with Ted Seides. He tends to have some good ones. Also, if you can, there isn't a whole lot of these, but Value Investing with Legends is pretty good.
All right.
That's a solid one.
I think that's a lot of choices there. Okay, new topic, and now this one, I think, because we've looked at some of these companies before. This is from Thunderdome Capital, and it's more of a rhetorical question. Is there any worse capital cycle developing than the one for electric autos and electric auto batteries, where basically there's this huge demand that's coming, right? It's staring everyone in the face potentially with the projections people have. But in order to get that, there has to be a ton of capital investment. And then once that happens, it just there's so much money flowing into space. If you kind of get what I mean, you can see that almost every large company is saying we're investing tens of billions of dollars into it, and it's so hard to build up an electric vehicle company because of just how capital intensive it is. And once that cycle rolls over, as it does with basically all capital intensive industries, with minimal moats, it does it feel like it's just staring us in the face, like that rollover. I'm kind of distracted. Maybe I'm describing it poorly, but kind of that rollover of the capital cycle.
Yeah. I mean, you maybe described it in sort of a complicated way, but basically, are you saying when basically the money's going to flow out of it now and demand's hitting sort of highs?
No,
Is that
no,
the way you're thinking about it?
not consumer demand, but the the tens, probably hundreds of billions of dollars that are flowing through from all the different companies into building up their battery capacity or electric vehicle manufacturing capacity. They're seeing the demand out there, but since there's just going to be this flood of supply, it's like it's staring us in the face that there's going to be this consumer surplus, and that's going to be bad for the companies. Now, whether that's staring, what time frame is that? I don't know, but I'm pretty confident that's going to happen because if you look historically, it happens. Like, why would this time be different? I just don't know. Yeah. Like, it's not just
It's a bold thing to say because that has some interesting implications. First of all, that means used car prices are going to plummet.
Well, I think that's disconnect. I mean, this is more multi-year. I think maybe used cars prices is more multi-year, but
But if you're saying, because the way I think about it is basically the EV production, and I believe this is essentially how the companies have stated it, is going to replace a lot of the ICE production. Like the vehicles they're actually producing might not rise that much, but it's
right.
going to replace some of the ICE vehicles that they would have produced.
But it seems
So
like they're going to produce too much, too quickly, or maybe
too
too
much cars
quickly.
in general.
No, too much too quickly. Like, I mean, we think of all the announcements from these companies.
I don't know. I don't know about that. You've still got big waiting lists. Like when you go to these dealers, my dad was looking at buying an EV recently too. You're still waiting on a pretty big waiting list.
But
I think they're
look,
going to have some visibility into that as those waiting lists compress.
yeah, but
And it
here's
isn't, I don't know, it's not an oil producer. Like you don't, you think they're going to cut back production
well, here's the thing.
quickly?
Here's the big concern. You got all these commitments, right, to build all this manufacturing capacity globally. There's a ton of capex that goes into that, and you need a certain level full of factory output to make that factory, each individual factory, profitable. If everyone overdoes it in general, that screws everyone. Too much capital flowing in. No matter what the end demand is. I mean, yeah, look, it's hard to get an electric vehicle right now, but that actually could make things worse because then they might overdo it. There could be a big bullwhip effect on top of this. And I think the COVID disruptions could make it even worse.
Yeah, but what if you've got EV production as a percentage of overall automotive production? It's like what, 5% right now, less?
Yeah. Oh yeah. It's, I don't have the exact numbers, but sure, you're probably in the right ballpark.
I would say if you're picking today, like let's say prices were equal and you're a consumer, 70% of consumers would probably go EVs, right?
I disagree
That
from anecdotes, but maybe a little lower, but still fairly high.
I think you still have plenty of room to increase supply across the board.
Yeah, but that I think we're talking we're talking through each other because I do agree. I just think that it's pretty clear they're going to do too much because of just so much money is getting, like, think about all the commitments that these companies are making.
What if they can't? What if they literally can't? They don't have
They
enough
literally can't.
chips.
Oh, well, then that's a different question. Maybe that saves it. But it's just that the capital, I don't know the exact term, but the capital cycle theory or just like all these new industries, it's throughout history, the same exact thing has happened, and it feels like it's about to happen with electric vehicles. Not like about to happen like this quarter, but about to happen over a multi-year period. I mean, I think the best near-term historical analogy is telecom infrastructure in the late 90s, early 2000s. I think that is extremely similar. Everyone is like, wow, we need this internet infrastructure. We need to invest as much money as possible because there's just an endless opportunity. Turns out it was not infinite. I think that same thing. That's what I'd be worried about if looking at the electric vehicle space right now.
Okay. There's another question.
Excluding the valuations, which are still
We'll see how it
surprisingly
plays out. We'll see how
surprisingly
it plays
high.
out. I would not be buying any automotive producers right now, probably. Sorry if you own any.
We got a Matt H saying, you mean to tell me QuantumScape isn't going to be at $1,000 in 5 years? That is what my DCF says. I can guarantee. I know he's
Could
being
be reverse
facetious
stock
there.
split.
Well, yeah, you're right. All right, go ahead, Ryan.
So Sandeep says businesses like Match and Spotify seem to already have significant scale, but are not achieving GAAP profitability. I don't think that's accurate for Match Group, but I
Well,
understand.
recent quarter looks back because of a write down, but I mean, yeah, look at historically.
Yeah, I would say over its lifetime as a public company, it's generally GAAP profitable. Hard to bet that they're ever going to achieve 20% plus GAAP operating margin or GAAP net margins, whatever you want to choose, EBIT margins. I would say you're right for Spotify. It seems unlikely that they will ever achieve that.
But that doesn't matter. So what?
No,
Amazon.
it doesn't.
Yeah.
I mean, it doesn't change that. I still think it's a good investment from here. Granted, we own it, so keep that in mind. We got to, you know,
Full disclosure.
we're talking our book. It can still be, you can still generate good returns without reaching more than 20% margins. Match Group will. I say that with a whole lot of,
Yeah, it's
like,
hard. Their historical track
sense of
record.
surety.
I was just writing something on them, so I know their numbers. From 2017 to 2021, they grew revenue by 22% a year. So investing for growth, and at the same time, their adjusted operating margin, which correlates, is just slightly different than GAAP. So their GAAP was just slightly lower than this, was above 35% every year. So they're investing for growth, and a lot of their apps weren't being monetized yet, say like Hinge, and they're still at 35% margins. That translates fairly well into free cash flow too. I don't really. This might sound to some people, I don't know what it would sound like, but like you might disagree with me. I don't care about GAAP. How much cash is? I don't care about GAAP net income. How much cash is? How much cash is it going to generate? That's what I like to focus on, because GAAP net income can look wonky. Yeah, free cash flow can also look wonky sometimes. But I'd rather start at the cash flow and then make any sort of adjustments that are either making the business look better or worse at that one time period, and go from there. Because what the value of the business is the cash it generates, not the GAAP net income.
Yeah, I was going to say that as well, Sandeep. If I think focusing on cash flow margins is probably a better proxy for the earnings power of the business, I guess, for both of those companies. And I do think Match will continue to have around 30% or higher cash flow margins, depending on if anything ever happens with the App Store fees. But hopefully that answers the question a little bit. Do you want to talk a little bit more about the Twitter deal or no?
It's really outside of our expertise, if we have any.
What do you mean?
Like,
We're
not like
lawyers.
yeah, exactly. I think this is the outcome as the lawyers that we were thinking was going to happen, where he would either through the trial or through a settlement would have to pay, just because the evidence was really, really damning that Musk could get out of this deal. So not really surprised. However,
I mean, it's comforting to think that the legal system works.
Exactly. I think that was the biggest takeaway as someone who had no skin in the game here.
I have a little bit of a theory, and this might prove to be wrong, but you've got somebody who's made his intentions pretty clear on what he wants to do with the platform. I think
we're accelerating. It's an accelerant to X, whatever the hell he was talking about. Accelerant to X, the everything app. Right?
Ignore that. It's not gonna. That won't.
You're saying that
he wants to be a little more lenient with free speech on the platform.
Right. That was his number one thing. Yeah.
Regardless of what you think of that, I think there's going to be a disconnect between how the employees like the business and how Elon wants the business.
The current ones, at least, yeah.
Additionally, I don't think a lot of them were a big fan of this process. He's made it very clear that he wants to fire people. I've got a feeling the turnover is going to be somewhere around 70 or 80% on the employee base at Twitter.
Is that good or bad, though, for the business?
So either one of, I think a couple things can happen. They'll learn just how lean these businesses can be run, how little employees it actually takes, or the investing community will learn how much employees it actually does take to run a business like this properly. And the platform will begin to struggle due to all this turnover, due to not being able to keep up with any changes as effectively as they should.
Yeah, it's interesting. We're not gonna know though unless because it's gonna be private, right? I guess they'll share. Well, they'll probably share stuff if it's going well, because then they'll want to brag.
Well, we'll know if the platform's beginning to suck via our experience.
Well, isn't that already what happens?
I don't
So
know. Does it take more to maintain just the business staying up?
that's true. Yeah, I guess. Yeah,
Like,
it could get way worse.
is the
It
security? I'm curious. Like, could the platform come down? Could it like stop functioning
yeah,
without all the employees?
I don't know. I don't know. I knew someone that I think he left, but I knew someone that works in their database segment said it's a really tough. A lot of it's like just so much data to manage. Um, but yeah, I guess it could get worse. I hope it doesn't collapse, but maybe I should delete all my Tesla Q bearish tweets just in case. Just in case he goes a little less free
The
speech. All
worst
right.
part about this is that the Ukraine takes he got completely ratioed for, like a brutal ratio.
Yeah, you always got to think, why was he doing that? There's always an ulterior motive with Elon Musk. Why was he doing the Ukraine thing? I can't figure it out yet. We'll know eventually because he's always got a motive for his tweets, right?
I saw some. I saw some that potentially he doesn't get the financial commitment from the banking partners that he initially had. He has to go to Russia for financial backing, and
Like
then
the
the
oligarchs or
government
something. Yeah.
the government says we're not going to let that happen, and then he says, "Well, then I'm not going to buy the business. If
That's
you're
a
going to
lot
shut it
of
down, I don't have to buy it."
that's a lot of it's a lot of variables there.
Yeah, I know
I
that's
mean, I wouldn't be surprised. I wouldn't be surprised, but that's slightly far-fetched, but in the Musk world, I would not be surprised. All right. New topic from TikTok investors. TikTokers now are you this is the pitch. Are taking their Discord account public. Now let me read the definition here and see if you are interested in buying this company. Asset Entities is a technology company providing social media marketing and content delivery services across Discord, TikTok, and other social media platforms. We also design, develop, and manage servers for communities on Discord. Now, this this is definitely a legitimate public company, right? Like this is something that's not just a small business that needs you know,
certainly.
they're taking this public because it needs more capital, right? That's the reason they want to access the public markets, not trying to dump any shares on unsuspecting Discord members, right? No, that would never happen.
And then they announced that our stock's the most cheap, and then pump their own.
Yeah. I have
It's closed ecosystem.
yeah, here's what I saw. I was doing I don't know where I saw this week, but there was a company called Pagaya Technologies. You may have heard of it. Kind of
I
a
have.
poor man's upstart, a lot smaller. It is down in the last 3 months, or last month, excuse me, 86% because okay, so they had about 650 million shares outstanding, something like that, right? Or no, I think fully diluted. It was a SPAC, so warrants were weird. I think it was closer to 700 to 800 million. But they announced in September that they were doing a $50 million stock offering, and this is right when the lockup period's about to end. So they 50 million, not dollar, 50 million share stock offering. And on top of that, they were unlocking 650 million of the insider shares to sell. 650 million were in they were raising money through that, but they were doing stock offering for there. And lo and behold, the stock collapsed 86%. That is gotta be. I mean, you see that and you just, how can you touch SPACs? How can you touch recent IPOs? It just seems so dangerous that you don't know when you're dealing with a malicious executive team.
Yeah. It's I kind of I've never purchased a SPAC, and there have been times where I've been like mentally bought in on the business, and I think everyone's gone through this like mental process of, okay, all other investors are discarding SPACs because generally the average SPAC is
Trash.
out to make a quick buck. The So maybe I'll find the diamond in the rough. You think you found the diamond in the rough, and then lo and behold, it's more of the rough than the diamond. And it for me, like I just don't think I'm smart enough, or
Yeah.
I'm guarding against my own mistake that I'm gonna make, and I'm just saying like discard them all.
Yeah. I don't know. I feel like there needs to be, even though it's weird to have arbitrary or just weird arbitrary rules as an investor, I feel like it's almost always better to just wait a full year for a stock to be public. If it is such a promising business, waiting a full year to get some audited financials is not going to crush your long-term returns. I just feel like that, that's just going to save you more than it's going to hurt you.
I agree. All right, couple of other things. First of all, the Jim Cramer inverse ETF is officially public.
All
I don't know
right.
if you saw this.
Fade that stuff. That's tired. Those are tired jokes.
I but it's actually you can invest in the ETF now.
Yeah, I want to know how it's gonna do. These though, here's the thing about those ETF strategies that have these weird, unique things. They usually, if you look at what they're actually doing with the rebalance thing, it doesn't make much sense. Now, maybe this makes a lot of sense, but I kind of doubt how they're gonna be like, oh, Cramer talked about or tweeted about something, and we're gonna short it, like, or buy it, like for what time period, for how long? I don't know. I mean,
Well,
their back test has got to be strong, but
he's
well,
got the his premium service or whatever that maybe takes
oh,
positions.
oh,
But he
gotcha.
said, this is from Eric Balchunas. He says, new filing for a, wait for it, inverse Cramer ETF. Ticker is SJIM. And it's Tuttle Capital Management. Not really sure who they are. It says SJIM will be a long short strategy, basically taking the opposite position to Cramer's publicly announced positions on Twitter or CNBC. We actually wrote back in February about how an inverse Cramer ETF would likely be filed at some point. Given some of the stuff that has been tried with ETFs, this isn't big. This isn't a big stretch, and ETFs tied to big personalities not unprecedented.
It's just, yeah, I mean, I hope they do fine. But that just
If you
type of
saw
stuff,
this in someone's 13F, what would you think?
um, I would never give them money.
Is it
What are
investable?
the, no, come on.
Not, I mean, like like in your fun basket.
If you really hate Kramer, look, I get that people think he's just a little bit overhyped, but I don't really get the malice, if you know what I mean. Like, okay, he's just not that good. That's fine. But and maybe if he screwed you over, like, some way,
That's on
I would,
you. That's
yeah,
on you more than on him. But he has been like impressively bad,
recently. Yeah. I
like
mean, look,
crazy,
he,
crazy luck to be as bad as he has been in the
here's
last
the
year.
here's the thing though. With everyone, if you put all of your stuff public, right, then people can hone in on the stuff that I'm not defending Kramer as a great investor, but if you're even in the best investors are going to be wrong what a lot of the time. So especially on the internet, you can just focus on what they did bad and then just people forget about the good stuff. And I just don't think it's probably not as bad as it looks just because you can cherry pick.
I mean,
Um,
yeah, no, he's a hell of an entertainer,
yeah,
which he's fairly captivating. Like I see something with him, and it's kind of like,
he's got energy. Oh, 100%.
yeah,
He's got energy. I just don't. What's this fee on this thing? Did you see? They might not have
no,
it.
I'm afraid he's got like, I'm afraid it's like,
1.5%.
yeah, something like that, something wild. Um,
Still not going to cover those
couple of
ETF
other
fees.
couple of other news items that I think are worth talking about. It's actually been a pretty busy week. First of all, Carvana is named the title sponsor of the Professional Pickleball Association and multi-year partnership. Is this going to save the company?
Yeah, I think that's the advertisements they need. I get a lot of Carvana ads. I'm telling you guys right now, Carvana, if you're listening, I'm not. It's not happening. Um, I'm not going to be a customer. But Yeah, that company is, are they screwed or are they screwed? I mean, that they're in such a tight spot.
Yeah. There is, oh, we should talk about the Poshmark deal.
You want to do that now? Let's see if
Yeah.
this can be our 7 investing segment. We have a little combo here. Remember, we talked about at the beginning of the show. We're going to be highlighting our sponsor, 7 Investing a lot. Use code MONEY, MONEY, to get $100 off your annual subscription every year for life. That's 25% discount. Help us out, get a discount, and sign up for a great service. They had, we're not going to spoil what the pick is. They had one of their picks, a, let's say, healthcare company. Don't want to spoil it too much. And it was entering into a take private offer from an investment firm. And they had I guess just kind of highlights part of their service as well, where when something happens, they're going to keep you updated if there's anything relevant that happens. And since this take private deal was gone through, they officially gave it a sell rating. So for any investors, you know, they're going to help you through if you're someone that wants that. But from on a wider note, excuse me, we're seeing a lot of companies getting taken out at big discounts to where they're trading at a year and a half ago. Poshmark was a huge example this week. Went public at like 100. It was trading at like $100 a share at its peak. Got collapsed down 90% down to $10, and now it got a take private bid at $17.90 this week from a South Korean company, which is kind of a surprise. What do you think about these? Here's kind of the issue I have. Like, what makes me nervous about these bombed out growth stocks that might have flimsy-ish business models, or they're not doing so well, is you could have made a thesis that Poshmark was a value stock and maybe $25 a share, right, with all the net cash they had on the balance sheet. You also could have made an even better case at $10 a share, but you don't know if the management is going to take that buyout offer that's going to screw you or really help you. I think there's just it's kind of a coin flip risk maybe on that.
I think it takes weight off their shoulders is what happened here.
Well, apparently the business, is not doing as well as they claim. I think something is going wrong because that was a huge discount to what people were the IPO.
Yeah, I mean, it's like, what, 80% discount to where they issued shares, maybe 60.
I think I can't remember if it ran up after the issuance, but it was at $100 a share. And yeah, it went public at the peak of the bubble in February 2021. But
it's a bummer. We looked at this pretty thoroughly at $10, and I had a hard time determining whether or not this was just a really shitty business or deep value or both.
but
and it was both.
It had like $6 in cash. Yeah, yeah, it had $6 per share in cash. I mean, it was a huge part of what you're buying at the time was just pure cash. Yeah, what's interesting is the stuff that we haven't bought this year, but like I've said, let's just wait, keep it on the watch list, has gone up like 100% in 3 or 4 months. Now, that's not the type of time horizon we like, but it is unfortunate.
Yeah, it's a bummer.
Yeah,
I
multiple
don't know
times.
if you're a Poshmark shareholder. Let's say you're a Poshmark shareholder and your average cost basis was $17. Are you happy here?
I think you are neutral and thankful because if you bought at $17 and your thesis wasn't to get a buyout, which maybe it was, and maybe you're slightly upset, your thesis was this is a business that is sustainable, then you're thankful because management team is telling you that you were wrong.
What do you think about owning it after these things are announced?
For the ARB or what?
Yeah. Yeah.
I will leave that up to the quants. And
I know it's situational, but there's been a lot of money made, I feel like, through merger ARB this year.
Yeah, I mean the Twitter one,
I think Activision will probably go through if I had to bet.
Yeah, I don't know why both those gaps were so large. Well, the Twitter one we kind of understand because of the Musk craziness, but for arbitrage, I feel nervous looking at that type of stuff because I know there's people with way better legal expertise that are at giant funds that have way more experience with that type of stuff, and I just feel like a total minnow if I'm ever.
Does it matter though?
If you Maybe not. I don't know. Maybe not.
Yeah. Well, I don't know. Kind of underwhelming for Poshmark. I thought this could have been sold for more. It felt to me like management didn't want to be public anymore. They went through just such a rough year that they're like, all right, just I don't want to have to keep filing. I don't want to have to take criticism from analysts. Let's just go private and we'll take the first offer we get.
Yeah, it's founder led too. Kind of weird.
He never
Um,
bought back shares with 60% of the market cap in cash, which is frustrating.
yeah, it's a red flag for sure. Um,
Uh, the
there
other
was
thing that I
go ahead.
wanted to mention, Jewel.
Official bankruptcy or rumored, right? Rumored bankruptcy.
Yeah, it says Jewel Labs said to prepare for potential Chapter 11 filing. What are your thoughts?
Officially one of the worst acquisition or worst investments in history was Altria's $12.8 billion investment like 5 years ago. Yeah, it turns out doing Instagram ads to minors for on addictive products will lead you to some hefty legal bills.
You know what would have solved this whole problem?
No.
If they changed their name. They could have changed their name and avoided all of this. I think
Yeah,
they could have avoided all the regulatory scrutiny because everything got targeted at Juuling. They're
yeah,
like,
exactly.
oh, Juul, everyone
Maybe
thought vaping was Juuling. There's all
vaping's
these
yeah,
rip-offs that don't seem to be getting any scrutiny, these disposable ones,
they're as popular
which
as
are
ever.
probably worse.
Most
Like if Juul
assuredly.
just changed to like vapor.
Well, they needed to take a clue from their investors, Altria Group, where they just named themselves some random name that some MBAs came up with to get away from the cigarette company name.
Yeah, 100%.
Altria.
Like,
Altria. What a beautiful name. No one has any idea what it means.
well, shame on Altria, I guess. Bit of a FOMO investment.
That was yeah, they invested at the peak.
I saw someone describe it as life insurance.
No.
I don't know if I'd buy that.
All right, they're likely an Altria investor coping. I'm sorry.
Yeah.
You have to have look. We saw what's an example? Spotify spent $50 million on that live audio one. Luckily, it wasn't larger, and they didn't buy Clubhouse for a few billion. But if you're gonna trust a management team, you got to trust that they're gonna be rational, even in the face of some short-term
Competitive
FOMO.
threats.
Yeah, like that Jewel peak is very similar to what that social audio thing was. It just was a super big trend that you could kind of feel like, all right, this is there durability here? Maybe, but let's see. And it was one of those things that just went viral. Yeah. All right.
Peloton's firing people. Oh, sorry. Were you saying
Oh
something?
no, nope. Go. New topic. Peloton's firing people. That's isn't this every week at this point?
Yeah, I feel like I've read that headline a couple of times so far this month.
They are screwed. I'm sorry to say. I've said this like 3 times this show, but they're screwed. I mean, who's buying a Peloton? Talk about used Peloton. Talk about used. We're talking about the electric vehicle capital cycle. Talk about the Peloton capital cycle. Those used ones are gonna be going for a few $100 here shortly. I mean, no one's buying who's buying a new hardware right now? Absolutely no one.
Someone said, okay, so this is what was sent out to the staff. It said, in quotes, here's a quote that Alex Morris posted. I know many of you will feel angry, frustrated, and emotionally drained by today's news, but please know this is a necessary step if we are going to save Peloton, and we are.
But without you, right? That's always like they always talk about how we're the
There's no
company.
good way to fire people.
Well, just yeah, I just don't do it publicly. Like I think we talked about that recently, right? Like it seems
I
like
think it's
it's super
worse
hard,
if you
but
try to hide it.
well, like not. I mean, don't hide it from your employees, but don't just announce it on Twitter.
Yeah, there's nothing worse than that.
I mean, yeah, tell your employees, you know, but yeah. All right, here's a good topic that people seem to like. I was trying to come up with and this is because we had the show on NVR, trying to come up with my Mount Rushmore of share repurchasers. I had one, AutoZone. They're kind of the legendary one, best one out there, at least recently. I know there's Teledyne, but I'm kind of doing ones that are, the last 20, 30 years. Two, NVR. We just did a show on them. Just a shout out. We did them on Tuesday for the CCM Plus show, the premium show. And then three, I had Swedish Match, which I guess RIP, it's going to be over, but they reduced their share count by like 70%. Then I asked who should be the fourth. Didn't really get a good answer for the current one. Because people would say like Apple. It's like, no, yes, they have been a good repurchaser, but it's not nearly as good as these companies. Here was my three candidates that could take the spot potentially, but they're not there yet. They could take it 10 years from now. They have a good track record, but it's only been like 5-10 years. One, Texas Instruments. Two, Sprouts Farmers Market. And three, Ally Financial. All seem to have really, really strong buyback programs. Do you have any that could make this list for you that you're thinking of? Any thoughts?
Like, could be future ones.
Those are either or, future or current.
I'm sure you can just look at, Ally, I think could be one.
We got to do share repurchases. We're excluding Bed Bath and Beyonds. These are ones that were really sustainable share repurchasers, if you get what I mean.
Yeah, I think Ally could be one.
Yeah.
Although I think being a bank, I was looking through this, being a bank holding company or whatever, there's certain capital ratios that they have to maintain. So it may limit their ability to be like overly opportunistic with their buyback. But I don't know. What are some of the recent ones we've looked at? Dropbox could reduce their share count by like 8% a year at the current pace.
Yeah, but that's only been a couple of years. I'm tired.
Lowe's is being pretty aggressive with it.
How long? Let me look up Lowe's.
Thing is, they have they're like 20 times free cash flow, so they can only do so much. You have to have a cheap valuation to make it happen. So you kind of have to be hated in order to be really
or forgotten about for forever. Yeah. Let's see. Last 20 years. Okay, 2010, say after the GFC ended, Lowe's was at about 1.5 million, and now they're at shares outstanding, or 1.5 billion shares outstanding, and now they're at about 620 million. They could be there. It's not bad.
Yeah, Lowe's has taken on a lot of debt in the process, though.
Really? How much? What's the ratio?
Yeah, Lowe's has shrunk share count by about 44% over the last 10 years.
I mean, even higher. If you go back, they were pretty aggressive coming out the GFC. Yeah.
I think they've got like 30 billion in net debt on a $120 billion market cap. Not too crazy.
Well,
they generate
what's their cash flow?
Like 8 billion a year. I think maybe 7.
Yeah, it's still pretty high. Pretty high ratio. Charter did the same thing.
But they just got 5 billion in new debt, and most of it is like 5% with 30-year maturities or longer.
Yeah, I guess that still isn't that expensive if you're a very profitable company. Here's the thing though, there's just, if you're going to be a levered buyback company, you just have a little bit of interest rate risk, and I would just prefer someone that doesn't do that over one that has to. Here's a good one is talking about RH, a guy like Friedman, who's the CEO of RH. Huge cojones, I guess, keep this child friendly, who has no fear at swinging at buybacks when he views the stock as undervalued, buying back 50% in 2017. Yeah, I mean, he had very high conviction on his own business. They took out some cheap convertibles, I believe, bought back 50%. Yeah, they're getting some dilution on the back end here, but I like that.
They're kind of going after it again.
I do like that strategy, but man, you have to believe in the business.
And you got to believe in the guy that's picking when to do these. Yeah, that was probably the most
that's gutsy.
Impressive buyback I've ever seen, like in a short time frame.
I just worry that we have when that happens, there's
builds confidence that they can do it again.
It's not as replicable across other companies. It's so boring, but I just love a company, a stock that stays cheap forever and consistently buys back. AutoZone, NVR,
Rest in peace, Swedish Match.
Swedish Match.
We
I
really
think
had it all. They took it from us. Look what they took from us.
I know the Swedish Match. Well, maybe no one's voting for the shares. Maybe it'll come back public. Yeah. And look, the thing, yeah, Matt here, thank you for the comment again, said that Friedman roasted the shorts. Yes, there's also the short thing. There's a lot of RH was heavily shorted. I mean, it's kind of that can add a lot of uncertainty as well. Their risk reward might be good depending on what price you're paying, but the consistent repurchaser that's just in a durable industry is so much safer, right?
We got a question about basically the cannabis business. Well, it's a comment that says, what do you think of Biden pardoning everyone's sentence for weed possession? Weed stocks are soaring right now.
First off, yeah, I think that's
don't have a lot of thoughts on it, to be honest.
Yeah, I mean, the first thought, I mean, that's great. And why should someone be in jail? I mean, it's pretty logical why someone should be in jail for weed if it's especially if it's illegal. Second one, weed stock soaring. Yeah, those are trading sardines a lot of the time. It's pretty unclear. We looked at a couple of companies. It's very unclear where the profits are gonna go in that industry. And it's so early. Why not just wait 5 years until you can find that, one that makes more sense that you has a track record? Because right now it's kind of seems like
it's still
so uncertain. It's so early.
It's also those businesses are still structurally disadvantaged.
Because of the taxes
with the tax laws.
Yeah.
Until that changes, I forget what that bill is that they're trying to pass. I'm reluctant to buy a lot of these companies. You don't have to buy a cannabis company.
Also, I have no idea what brands are good because they haven't been around long enough. I have no idea why any sort of store is going to be better than any other store, or why any sort of producer is going to be better. Yes, Coca-Cola could develop, or a Budweiser could develop, a Corona could develop, but we don't. Could you identify could you identify why Budweiser, like a Budweiser, prospectively? I think you'd have, you can wait 10 years, the brand will establish itself, and then there'll be still plenty of room to run. That's kind of how I see it. However, I could be giving up, potential 10 bagger, you know what I mean?
I'm comfortable with that.
Yeah.
Speaking of great brands, Monster.
So last year, wait for the Monster. Yeah.
Last year they acquired Canarchy, which is one of the bigger craft brewers in the US. I think it was $330 million deal. They were like the 6th largest craft brewer in the US.
What do they make?
Couple of craft beers that Dale's.
Maybe not West Coast.
There's some not like the most recognizable brands in the world, but they used that acquisition. I'm not sure exactly how this worked. I think you just can acquire the licenses, apparently. They used the acquisition, maybe it's for the alcoholic distribution points, to leverage into a new alcoholic monster beverage called the Beast Unleashed with 6% alcohol content. Do you think the Monster brand could work in alcohol?
Yeah. Yeah, for sure. Yeah.
Really?
Four Locos worked. And I mean,
Four Loko wasn't anything else before, though.
It's basically,
I don't know anyone that's successfully made that pivot over. Can't think of anyone.
Oh, you think it? Yeah. Okay.
From a normal drink to
the alcohol. Yeah, I guess that is maybe riskier than I'm thinking. I don't know.
Can you think of anyone?
I mean, Coca-Cola tried, and I think discontinued. I don't know the CPG space that well, so I might be missing something. It's, I still think it could work just in just looking at Monster specifically. They're sort of clientele. They could definitely work.
Yeah. I like the name too. Beast Unleashed. That could work.
Yeah, sounds like a football thing. All right. Anything else? Oh nope, that was the conservative dating
Gaming.
thing.
Mario
Gaming.
movie trailers coming out today.
As we were recording this, yes, 10 minutes from now, we're going to be hearing Chris Pratt, Seattle legend, as the little plumber. Hopefully,
Save Princess Peach.
as that poster looked good in the context of getting kids to go to the movie. Fingers crossed.
I'll
That
be in the
is
theaters. I might
supporting
look a
as a
little
bag
old
as a bag
but
holder, as a Nintendo
yes,
bag holder. Yeah.
doing my
All right.
diligence.
Yeah, let's see. Anything else? Anything else? Just a lot of jokes out there.
There's a lot of macro stuff.
A lot of macro stuff I don't care about.
All right, you got to pick 3 companies that you think will be bankrupt within 12 months.
Oh, and they
Go
can't
for
be
it.
okay. And they can't be like whatever, just a scammy company. They got to be something that other people may have a long thesis on. Well, let's just go with companies that I've talked about or we've talked about already on the show. Carvana, Peloton, and let me go Pagaya Technologies. I think those three.
I think the guy is unfair. Give me one I know more about.
Pagaya. Let me go on my short list on Robinhood that I made that I hopefully never use because I'm so bad.
And by short list, you mean list of potential companies you would short.
Yeah. Yes. All right. All right.
Credit
Ooh.
Suisse, apparently. It's funny how
Oh
everyone
God.
like the world was collapsing this weekend. Apparently, no one really seemed to care.
That
Bunch of
stuff
crap.
is that stuff until it gets announced. That stuff is
If you
yeah.
learn that the financial system is collapsing via some random Twitter account, it probably isn't valid.
I know. I know. All right, I got a lot here. Riot blockchain. That is probably doesn't count. App Harvest. I'm gonna name some until you tell me it counts. ThreadUp.
Oh, App Harvest, they're gone.
Oh, yeah, I mean,
Well
it's all.
capitalized though, if I'm not mistaken. They might have
They
longer
will.
than 12 months. Beyond Meat, Beyond Meat,
That's a good one. Yeah,
they
I
got
got.
debt they can't pay.
What about ThreadUp? That's a shit co.
Yeah, it is. It's a
Royal
wannabe
Caribbean.
Poshmark.
Royal Caribbean cruise lines. A lot of debt. Although for some reason banks continually give them debt. So I don't know. I wouldn't bet on that ending in the next 12 months. Nikola, probably not, even though it's bullshit. Oatly, probably not, even though it is a shit co. Yeah, I guess that's all on my list. Plug Power, that's a classic.
Coinbase, thoughts?
Coinbase, I would not be surprised either, although I wouldn't bet on it.
Now
I would not. That'd
that
be
would be an
huge.
interesting failure
Yeah,
because aren't their customers considered could be used as collateral?
that was in a financial document. Yes, so we don't know whether they would choose to or
It's
if.
systemic.
Yeah, we need we need all your magic beans
Too big
to.
to fail.
Yeah, we need your magic beans so we can re bolster our magic bean pile.
What do you think of Kim Kardashian getting fined 1.2 million for shilling some crypto on her Instagram story?
I mean, it makes sense that she got fined, but I don't see why they're going after her
And
specifically.
not
There's so many bigger whales that are obvious. Go after Chamath. Go after. There's so many others. Like this is not going to get the public on your side. She's so popular. It made zero sense to me. Now,
plus she
that,
said not financial advice.
yeah, exactly. Did she have it in
I
the
thought she
bio?
was protected.
Did she have it in the bio? Yeah. Look, did it make sense to fine her because it was a dumb, like, uh, shitty thing to do? Yes, but in the full context, pretty dumb, right? Like, there's so many other whales to go after.
Yeah.
She's not even in the world. Like, yeah.
All
But
right. We do have one question. Do you find yourselves looking at more international companies lately? I'm going to say this is our last
no,
question. No?
no, right? No, I mean, the US was so. I feel like with valuations coming down in the US, I like the US market better just because of the laws and stuff. I find myself looking more US now just because the valuations have been more attractive, but we're not opposed to looking internationally. Although generally internationally, I want a giant discount just because the markets, as a someone that's
I
not
agree.
living in those markets, I want this. If there's like a same exact company in Asia versus the United States, I want an extreme valuation discount. That's really the only reason I'd be interested.
Yeah, I agree. All right, that's
It's
time.
1 o'clock. It's 1 o'clock. All right, that's gonna do it. Use code MONEY. Get $100 off your annual subscription at 7 Investing, and the link will be in the show notes. Thank you all for listening. Remember, we are not financial advisors. Anything we say on the show is not formal advice or recommendation. We are general partners at Arch Capital, and clients may hold securities discussed in this podcast. Thanks again, everyone. Join us live on YouTube, 12 p.m. Pacific. Not very many people join, although we get a lot of good listeners on the podcast. But if you want to ask us questions, I can guarantee you we will answer them because we don't get that many. All right. Thank you all. We'll see you next time.